Good day, everybody. It's Trent Klarenbach with Klarenbach Research. Today is June the 24th, 2025. I tried getting some videos out yesterday. I had microphone issues. Not sure what the cause was or what the problem or how I solved the problem, but it appears to be working better today. Yeah, yesterday and today we're seeing a sell-off in canola futures. So let's just go back to what we talked about last week. We've been talking about this area of resistance for a possible month or a couple months now, I think, probably dating back to April. You can see it in the gray area here. A lower level of the resistance level acted as resistance back here in May, and again, first and end of May. And then now we're starting to see it in June here, the upper range of this rectangle and this potential resistance area is, in fact, acting as resistance. So I believe I talked last week about a buddy of mine who was shorting canola futures, the November contract, around that 744 level. And I stressed at that time to put a stop on, or I believe in the stops, and it's somewhere above 745, 746, but wait for a daily close. So that would have been a good strategy. And we didn't get a daily close above. I think daily close was just like 745. That was on Thursday. So despite having the rallies on Friday and again on Monday, we obviously did not get a daily close above 745. I suggested my strategy is to take profits around that 720, 722 level. That worked fine on Monday. But today, canola had another sell-off. So right now, it's testing this 50-day moving average. There's actually a Fibonacci retracement level right here too. So I'm looking for some buying to step in here. But if I was to enter a trade, and there might be a possibility for a trade here, a long position around that 706 level, where it's trading at right now, maybe. And I would take profits around 719, 720. Small little trade, catch a few dollars, it might work out. But we're buying on weakness right now and hoping we get a bounce off this 50-day moving average. I still think we're going higher. So let's look at the weekly chart and I'll show you what I'm thinking of. I still think we get up to that 780, 800 level. And what I would do, and this might be a good strategy for you, is I would ladder in some price targets in from 775 and ladder them in up to 800. Maybe 775, 780, 785, etc., up to 800. And if I am right with that hypothesis, then there's potential resistance around this 200-week moving average. But you'll be able to ladder in get some sales and participate in the price. If for some reason that 800 level does not act as resistance and we get above there, we can always enter back in with paper. And then above 800, the next level for me is 878. So, let's say 878, 875, somewhere in there. You probably want to front run that number a little bit to ensure some sales, but we're not there yet. But I'm looking for some support. Maybe we get down to the 690 level, maybe. But talked to some guys today there, and I thought this could be an opportunity around that 706 take some profits. I would exit the position at 720, 719, and then look to re-enter above that level if there's an opportunity. We look at the Klarenbach Price Index for Saskatchewan, and we can see this Fibonacci level right here acted as resistance. And it's always interesting when the Fibonacci's line up with the cash and the futures line up together. And they really shouldn't do that, but you wouldn't think. But that's just the way the markets work and the way the world works. Right now, this is yesterday's price. It's likely lower today, but it was down to that 10-week moving average. Maybe we come back down and test this breakout, this neckline that I identified in this head and shoulders pattern. Breakouts are usually retested. We've talked about that. We talk about that all the time, actually, and we anticipate it. So maybe we get a pullback down. That's around that 1440 level, 1445 is the price on the index in Saskatchewan. Again, you're likely to have different price levels, but if it gets down to that level on the index, I don't think I would panic right now. I would just anticipate it. Let's take a look at the monthly chart. and revisit that because there's some new subscribers here. And I identified a head and shoulders, inverse head and shoulders patterns, the left shoulder, head, and right shoulder. I drew this yellow line as the neckline. We broke above the neckline. What you do in these head and shoulders patterns is you take a measured move. You measure from the neckline, break the neckline to the head, and then you extrapolate that up. And I have a head and shoulders measured move price target between $19.40 and $20 a bushel. Now, it does not have to get there. When you're looking at technical analysis, you apply techniques to see where the price can go and get some idea where it can go. You look at where it's come from and where can the price go from there. There's I would say a lot of supply before that. Even if it gets up to $17.80, there's quite a bit of supply there. I've been talking $16 to $18 for, I don't know, 6-7 months now. We haven't got there yet, but on the index, I think there's been some guys made some sales at those levels, but we've gotten close. My index high is $15.89, so fairly close, but there's a lot of supply to work through, but we'll see. We'll see if this head and shoulders pattern is completed. Let's see if we get the measured move out of it. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.